Hello everyone, it's Renko here, and it's been a while since I did a video. I got a little bit of free time, so I thought maybe I would shoot a video on spread betting. A couple of you have been inquiring about what spread betting is, and how it works, and it's just like trading forex, like a forex pair, whether it'll go up or down, and you make money based on the amount of pips it goes into your favor. Now I'll be explaining everything using my MT4 platform. My thinkorswim has been going a little slow, so I'll be going through my MT4 platform and showing you what I use with Renko bars. Now if you don't know what Renko bars is, then just go on Google and do a quick Google search and go on YouTube, and you'll find a lot of explanations. But when I show you the chart, I will show you how Renko bars work and how to set it up. For now, I do my trading for spread betting on IG markets, so you can just go ig.com and it'll direct you to igmarkets.co.uk. And what you want to do is basically open a demo account, as you see here. I'm just going to make one up. Farouk, and okay. I'm just gonna make one up here, and I'm gonna kind of just show you. 64. That's not my real number, but should be a minimum of 10. I'm missing a number here. Com. Okay, I need a valid email address. So what should I use here? Okay, so I'm just going to pause it here. Okay, so it looks like I haven't received the email to activate it yet. So in the meantime, what I'm going to do is I'm going to show you a simple strategy that you can use for trading spread betting. So doing spread betting. So basically what you have in front of you, this is called Renko bars. Now for those who don't know what Renko bars is, basically these bars are time independent, meaning they have nothing to do with time. They just move based on pips. Okay, so you set them when you input the Renko bars, you set them so that they move in the amount of pips that you're looking for. So for example, if it's green, if I set it up to only show 5 pip or 50 micro pip movements, what it'll do is every time it moves up or down in 50 pip increments, it'll show green. So if it moved up 50 pips, it'll create a green candle here. And if it moves again up in 50 micro pips, then it'll move up here. And then when it goes down 50 pips from there, it'll move down here. Now, if it goes in between 50 pips, so if it moves 20-30 pips up and down for 2 hours, for example, which doesn't really happen, but when it does that, it won't make anything. Okay, it will just be up and down, up and down, up and down. But then when it goes down 50 pips, it'll create this red candle. So I set it to 50 micro pips. So as you can see here, this candle, I'm pointing at this green candle on top, and it says open was 127500 and close was 127550. That's 5 pip movement or a 50 micro pip movement upwards. I'm going to show you a red one. This shows 127550 and closed at 127500. So that's a 5 pip movement downwards. Okay, so it'll keep doing that. As you can see here, this one is 127500 and 127450. So the reason why I do that is because when spread betting, what you want to do is you want to be able to make money off of the pips. Okay, you don't make money off of micro pips, you make it off of pips. So let me open something here to illustrate to you how you get paid with spread betting. Okay, hold on one second while I open up my Paint, and we'll take it from there. So in binary options, you get paid on up and down. Okay, but in spread betting, this is a 5 decimal your USD. Okay, so every 5 right here, 1, 2, 3, 4, and 5, and you have to leave the last one out, you get paid off of every one of the 5th movement. Okay, so for example, let's just say, actually maybe it's better if I open Microsoft Excel since I'm well versed in that instead. It's actually easier doing that way. Add and subtract the way I want to. Oops. Okay, so let's just say, the Euro USD current is 1.2600 or 000. Okay. When, let's just say in an hour, it is 1.26080. Okay. The difference here, let me just make sure. The difference here is 8 pips. Okay. So let's just say that you predicted it currently that it'll go up by 8 pips in 1 hour. Okay, and you were right. You would make whatever you wagered. You'd buy 10 contracts for example, or you can buy even as little as 50 cents or $1 per pip, or you can buy $10 per pip, or you can buy $100 per pip. Whatever account size you have and a margin you're required, you can buy that amount of pips. So let's just say you wager $10 per pip. That would mean you made 8 pips. I'm just going to put 8 for now, okay? 8 pips times $10, $80 in that hour, okay? So that's basically how it works. Now, remember, if it's 8, it won't go by this last digit, okay? It will only, the 4th digit, the 5th digit, including the first one before the decimal point, is called a pip. Micro pips are the last digit. Okay, if it's a 6-digit currency like this one, it's the last digit is the micro pip. It's not measured by micro pip, it's measured by pip. Okay, so this right here is 8 pip movement. Okay, and 8 pips times the amount you wagered is $10 per pip is $80. Okay, now once I get this email, let me just pause it and check it again. Okay, I just realized that I have I just checked my email and I realized that I have an old demo account that I used from a while ago. Let me see if I can pull that up and if the password and everything works. If it does, then great, because I can't get a new demo account on this. I totally forgot about this account that I had. As you can see, this is a demo that I had from a while ago. So I'm going to take you through exactly what spread betting is. Now, this is almost the same thing as Nadex in terms of its platform, and you can even trade binaries here. I don't really trade binaries from Nadex or IG markets. I try to stick to the spread betting when it comes to these two providers. So for example, in order to get your spread betting, you would go to Forex and you'd go to spots. Okay, and from there you can get major FX, or you can just simply search. Now we're just going to use Euro USD to illustrate what I mean when I say pip movement. Okay, now because the market's closed, I might have a hard time. See, I can't even click on it. This is just great. Okay, so I'm just gonna have to use this for now. You can even go on YouTube and search IG market spread betting, and it'll show you what the tickets look like and how you can place your orders. Basically, the sell and buy are different. So if you're looking for the Euro USD and if you think it's going to go up, you would press this and a ticket would open, and it would give you the option of putting how many contracts. So where we saw over there, you can put $1, $10, $5 over here per pip that you want to risk. Okay, and you would press buy, and then the price that you would buy it at would be this. Now it would be different than the price in your market. Okay, the price in the market would be somewhere in between. Your sell is lower than your current market price, and your buy is higher than your current market price, because that difference is the spread, and that's what the broker makes. So when you buy, you're buying it at this, and when you sell, you're selling it at this. So the bid and ask. Okay, so let's just say you think the Euro USD is going to go up from 126.72.3. Okay, and you think it's going to go up to 126.882. That's a 10 pip movement. Okay, 10 pip movement multiplied by the amount of dollars you purchase per contract, and that's what that's what the profit you make. So that's 10 pips times 10 is $100 you make by the time it goes up. Now it expires until you cancel it, so you can get out of the trade whenever you want, whether it's losing after a minute, after 5 minutes, after an hour, after a couple of days, whenever you want, you can get out of the trade, or you can wait for the trade to go up and up and up and up until it reaches to wherever you think it go. It'll probably go to 136, whatever, and then if you buy $10 worth, that's it's over $10,000. But anyways, you can exit and enter whenever you want, and that's one of the big advantages of spot forex. Now, how much risk do you do? Now, that's based on margin. Okay, they have a specific way of calculating margin. So usually, I've seen that if you do a $10 per lot, that's what they call this thing right here is called a lot. Okay, if you do $10, then your margin usually is about $200 to $300. So you need to have at least $200 to $300 in your account to be able to make that trade. Because remember, if you're wrong and this goes the other way, you're going to be losing $10 per pip. Okay, but we're going to show you ways to decrease your losses by showing you methodology, a simple price action and moving indicators strategy. So I'm going to take you through the Renko chart right now. So this shows price movement, and for obvious reasons I just want to see what price movement is. So for example, this right here is 5 pips. Each one of these bricks are 5 pips. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 bricks multiplied by 5 equals 17 bricks times 5 pips each is 85 pips. Okay, now if you wagered $10 per pip, then you would have made $850 in. Now notice the time. Okay, it's the 21st of October, 11 a.m. and see, it doesn't go linear because this is based on price movement and not time at all. Only based on when these pips move in 5 pip increments. Okay, and it ends at 2:15. So between 11 a.m. to 2:15, you would have made $850 there. So, what is a simple strategy behind going through Renko bars and putting in your order and creating your stop losses? Okay, now one thing you have to keep in mind is do not be greedy with this at all. Okay, it could move 15 pips here, 15 pips there, but don't be greedy. Only look for the 2 or 3 bricks. That's it. Okay, so for example, let's just say we're here. Now this is the moving average, 100-day moving average, exponential moving average, and this is the 20-day exponential moving average. What you would do is you wait till the blue, the 100 moving day average, goes above the current price. So for example, let's just say you're here. Okay, you wait till this happens. Okay, and then you're still not doing anything. What you want to do is you take sell signals only when this blue line, this blue 100-day moving average, is above this price. So if you're a less risky trader, you want to only take it when the price comes and touches this 10-day or 20-day moving average. Okay, in this case, see, it touches here and it goes up here, and then you can take a sell signal. Do not take buy orders when this blue line is above this. Okay, only take sell signals, and the sell signals are shown by this line over here. Okay, and it touches here, and what you want to do is you want to also put a stop loss, and I'll get into that in a second. It touches here, and you put a sell order right when it hits this line, or you can wait a little bit until it goes up a little bit if you want. So you'd sell it right at here, 1.27695. Okay, and you only want to take profit for 4 bars, 3 or 4 bars, whatever your risk tolerance is. Okay, no matter how far it goes down, you only want to take it for 3 or 4 bars. 3 or 4 bars, let's say 4 bars times 5 pips is 20 pips. Okay, now 20 pips multiplied by, let's say, $10 per contract, and you're looking at $200 for that movement. Okay, and you have your stop losses in place as well. So let's say you're risking you're risking $10 per pip. Okay, your risk. Okay, your limit, meaning what you're willing to make and profit, is 4 bricks. But you should also have a stop loss of half 2 bricks. This is my general rule. You can do whatever you want, but have it a 2-to-1 ratio. So only risk 2 bricks to make 4 bricks. Okay. So what that means is, once you go into your trade, okay, you look at the 2 boxes above that. Okay, so let's say you enter the trade right here. Okay, 127701. You want to measure the 2 boxes above that and place your stop there. And in your ticket, you'll be able to place a stop there. Okay, so the 2 bricks above is 1 and 2. So you'd want to place your stop at 1.27799. Okay, but then you'd want to also let your bricks go to 4. So you buy it here. This doesn't stop you out yet because it doesn't get to 1.2799 up here. It continues downwards. You 1, 2, 3, and 4. That's where you automatically exit. Now in this ticket, you would be able to see limit and stop, and you'll be able to put those prices in. Now this is very automated. This is very technical. You can become like a robot doing this, but at the same time you're mitigating your risk and you're making profit. So look at this. Now see, every time it touches it, you can do that if you want. Okay, so place another trade here, go 2 bricks up and put your stop loss there. 1, 2, this would be your stop loss here, and then your profit would be 4 bricks under this. So 1, 2, 3, 4. This is where you'd get your limit and make your profit of $200 right here. Okay, and then it goes back up here. Now I usually would do it once on the first touch. I'd just do it and leave it alone. Okay, now you have other currencies you can play with. So then what happens? It just starts retracing up, and don't do anything. If it starts going above this line, do not buy yet, because you have to wait till this blue line is penetrated and then do a buy signal. So let's look at another example of a buy signal. See right here. See, this penetrates the blue line and goes all the way up, and then it hits the red line, and that's where you put your buy. Okay, and put your stop loss 2 bricks under that. So 1, 2, this would be your stop loss, and your profit would be 1, 2, 3, 4. This is where you take your profits. So all of these 4 bricks. Okay, now it's your own risk. You can do 5 and 2, 5 profit bricks and 2 loss bricks if you want. And even if you want, you can even just let it keep going until you see the first brick the other way, and then you just close your order. So for example, let's say you placed your order here, and it went up 1, 2, 3, 4. You're just watching it go up, go up, go up, and as soon as the first red bar comes, you can stop it if you want. That's how you can do it. Or you can do the safer method and just do 4 bars or 5 bars. Okay. Now you can also notice that every time, well, not every time, a lot of the time, as soon as it penetrates the blue 100-day exponential moving average, it continues to go down. Okay. Now, if you want, if you're a more risky trader, as soon as it penetrates and closes under that blue line, you can place a trade on the downside and wait for the first opposing brick before you close that trade. So if you were in the market here, you would watch it. Oh, there, it broke. So you'd place a sell trade. Don't put any stop loss or anything, and just watch it continue going down. Now remember, this is 1, 2, 3, 4, 5, 6, 7, 8, 9 bricks times 10. That's $900. Okay, so that's 90 pips times 45 pips times $100. $450 right here in this small little movement. Okay, and as soon as this candle came, you'd close the trade. So you would actually get 1, 2, 3, 4, 5, 6, 7 bricks of profit times 5 pips each, which is 35 pips, times $10 per contract, which is 350 bucks. Okay, and then you would wait till the price touches the 20-day moving average again, and place another trade and put your stop loss at the 2 bricks above that. Okay, so 1, 2. This is your stop loss. So stop loss means, let me put a line there. Stop loss means, this will be your stop loss. Stop loss means that if it goes, this is to manage your risk, by the way. If it goes beyond this line, or if it touches this line, you would get stopped out of the order. Okay, and that is there to ensure that you don't kill your whole account in one trade. So if it goes exact opposite of what you think it's going to happen, you won't lose all your money. So what you want it to hopefully do is continue in the way you think it's going to go. So you put your stop loss there, but you put your take profit 4 bricks under this line. So 1, 2, 3, 4. So this is where your profit take would be. Okay, so you're risking 2 bricks for 4 bricks. Okay, and then it comes back again. So once this is closed, you wait for it to come back again and touch this line, and when it touches it, you place another order and do the same thing. So let's get rid of this. Oops, I deleted the wrong thing. Great. I haven't used MT4 in a long time, but that's okay. I meant to delete this and delete this. Okay, and what you want to do is then it comes back and touches this moving average again. So you'd put your, so when it touches it, you put it 2 bricks above, 1, 2 bricks. This is your stop loss. Okay, and you take your profit 4 bricks under where you put it. So 1, 2, 3, 4. So this is where your take profit is. Okay, and just keep doing that until you get sick and tired of it. So I mean, remember, at some point, if you keep doing it, it's gonna start penetrating. It's gonna hit your stop loss. So if you're less risky and you just want to make a couple of dollars, a couple of $100 per day, whatever, then just do it the first time it touches. And if it goes your way, stop it. Don't keep going. This is for someone that keeps going and going and going and going. So let's just say here. See, when it comes here and doesn't touch, then don't do anything. Wait for it to touch. See, it touched here and it went back down. Touched here, went back down. Came close, it didn't do anything, but went back down. And here it penetrated. Okay, but it continued going down. But then remember, you don't want to keep doing trade over and over and over again unless you think you're willing to take the 2 brick loss to make all of these profits. That's another way to look at it. But it's not always going to work the way you think it's going to work. So let's just look at it reverse again. Okay, so let's just say over here, remember when it penetrated, you took you just waited for it. You took the trade right when it penetrated and waited for the first opposing candle to show up. You can do the same thing here. So right when it penetrated, you take the trade 1, 2 pips, and as soon as this came, you stopped it. So it'd be a break-even trade. Okay, and then it can see. Now this is a bad example because it kind of ends right here. So let me go all the way back here. Let's see what happens. Okay, I'm just going to use it. Remember, this is time independent, so it doesn't matter how far I go. It's the same shit. Now this is an amazing strategy. I mean, it's so simple. You don't got to do anything. You just got to wait around. The only thing is you just got to wait around, and that's the only part that I personally don't like. Anyways, so let's just take any random spot. This is all ranging right now, so I'm not going to do anything. You want it to be in going into a trend, not being straight like this. When the 100-day moving average is kind of just horizontal like this, don't do anything. Just wait for it to kind of go into a trend. See, it broke out and started going into a trend. So that's what you want to wait for. So once it starts going into a trend and this starts sloping downwards, okay, you can start taking your trades from there. All right. Now in this instance, it never touched. Okay, and this started smoothing out. So you don't want to take any trades there. First time it touched, you probably, if you had taken a trade there, you would have been stopped out at a 2 brick loss. Okay, and then it starts going up. Okay, so it hasn't penetrated yet. So when it penetrates, there you go. There's a penetration right here. 1, and then you could have done it again when it penetrated. 1, 2, 3, 4, and just waited for this candle to come and then stop the trade out. and then wait for it to kind of touch back this line and go to your you do your 4 brick and 2 stop loss. But remember, this again is horizontal, so you want to wait for something to actually happen. So see, this broke, and now this 120-day moving average is starting to go under this 100-day moving average. So now you're waiting for the price to touch this line for you to do the same thing you've been doing all this whole time. So it broke. You can take your trades if you want and wait for this white candle, the first green candle, to come to close it, or you can just wait for it to touch this red line after it's under this blue line, and then take the trade. So here it touched it. You do 1, 2, 3, 4 as your limit, and your 1, 2. This is your loss. Okay. So right here would be your actually 1, 2. This would be your stop loss, and this would be your limit right here. Okay, and then if you did it again, you would have been stopped out here because it just continued on up. Okay, so I encourage you, just do it once and just leave it as is. All right. My throat is starting to hurt, so I might just stop this video soon. Anyways, so then you wait for it to start penetrating. So there it is, penetrated again. It retraced back here and it started going up again. Okay, so remember, when it's ranging and when it's sloping, every time it penetrates, most of the time it penetrates, it actually goes a couple of bricks in your direction. Now all you need is a couple of bricks. A couple of bricks is 10 pips in this case, and 10 pips times $10 each pip is $100. So it penetrated and it started going up. Okay, and then it started penetrating again. See, it touched here, went down. You can do your 4 pip thing here. Went down, went down. Now, if you're more risky, then you can do, open the trade, and if it shows 2 Renko bars in the opposing direction, you close it. Okay, so then it touched here again. If you're more risky, you just watch it, continue down, build your profit, build your profit, build your profit, build your profit. Because remember, you want to stop at 2 pips, build your profit, build your profit, build your profit, and then right here you'd stop it because this is the first 2 brick in the opposing direction right here. Okay, so you'd get all of these pips right here. Okay, and then it touched, and you can do it again. Okay, so it's a very simple trend following strategy. Now look how far this dropped down. Okay, now then it penetrated here, but it's faked you out. Okay, so this would have been a loss right here, just a small loss, because remember, you penetrated. Now you could make your own rules saying that if it goes past where I purchased it, then I'm going to stop out and I'm going to wait for it to go back up again. See, and then it went back up again, penetrated, and you buy over here again, and then you just watch it go up, go up, go up until the first candle or the first 2 candles opposing, whichever one you're tolerating, and then you close it. Okay, so that would have been 1, 2, 3, 4, 5, 6 times 5, 30 times 10, it's $300 right here in that span of time. Okay, and then just keep doing that over and over. And remember, try not to trade when this thing is horizontal. All right. Now, as you can see, they all gravitate towards the moving average. So if it goes too far ahead and this is kind of still slanted, then you know that this is probably going to come back down again. So you can use these kind of rules to formulate your trading strategy. So down here it kind of completely penetrates it, and it just goes down, 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 down. It doesn't touch it. So if you're you can, even here, you can still trade all these, take minor losses, or use break even. So this penetrated, and your psychology here, for example, is okay, every time it penetrates, I'm going to let it ride until the first pip that it goes in the opposing direction, and I'm going to close it. So here you would have opened it here, and it would have been 1, 2 candles. Okay, but then this green candle comes and you close it. So that's a break-even trade because you opened it here and it closed here. So that's a break-even trade. Same thing here. 1, 2, opposing candle, stop. So break-even trade. Came here, penetrated 1, and this would have been a loss because it didn't go down 1. Okay, so this would have been a loss of 1 brick. Okay, and then penetrated here, 1, 2, 3, and then 1 brick here. So you stop it right here, but you would have had that 1 brick profit. So 5 times 10, $50. Okay, and you can even do the opposing way. So it came back here, and you would have purchased. Okay, and wait for the first brick here, and you close off. Okay, and then over here it penetrated. You wait for the first brick here and you close off. Okay, penetrated here, and this you would have waited for the first brick down opposing way, and it would have been all long way down. Okay, you would have made, damn, 1, 2, 3, 4. Let me just see how many bricks here. 25 bricks times 5. Okay, that's 125 bricks times 10. It's almost 12 grand you could have made right there. Sorry, 1,250 bucks in that span of time, which is from October 3rd, 9 a.m. Oops, October 3rd, 9 a.m. till October 3rd, 3 o'clock. So basically, a working day, you would have made over a grand right there, and then just closed it off right there after that first pip. Okay, and so on and so forth. I mean, the Renko bars is a really good way to kind of, watch the market and place your stops and your limit orders very precisely. Okay, and be very diligent with how you trade. So when this is going up, see, when it's under the when the blue line is under the price, that means it's an uptrend, and you only want to take buy orders. Okay, when it's the other way, you only want to make sell orders. Okay, that's what these lines are for. Anyways, my throat is starting to hurt. I know I'm a little wussy, but this hopefully shows you how to trade Renko, how to trade spread betting. Now, unfortunately, I couldn't take you into spread betting, but you can go on YouTube and look for videos that will help you in that. So let me see if I can find a couple of videos that'll help you, and maybe some searches that'll help you research IG markets, how to place a trade. Okay, IG markets, how to place spread bet. See, there's a lot of stuff. Placing a spread bet order on IG index. It'll show you it'll show you how you can put in your limit order and stop order and everything. So what I showed you in that chart is once you place your order, you place the order and then you modify your order once it's placed to put in your stop and your limit orders. Okay, and then you just let it do whatever it needs to do. If you get stopped out, you get stopped out. You were right or wrong. You're gonna be right or wrong anyway. All right. So I don't know if you guys can hear that. See, this is what it looks like. Okay, so this is exactly what it looks like. Let me see if I can get to the ticket part. Okay, so this is what the ticket looks like. Okay, so you'll have your sell and your buy. You put the direction you think it's going to go up, so you buy. Order level. This is where this is order to open. Actually, this is not. This order to open means if it reaches a certain price, it'll buy or sell. If it reaches that per certain price, what you want to do is you want to buy if at the current time. Okay, let me see if they show that example. So see, this is where they put, the amount of money you want to make or lose per pip movement in your direction. Okay, so imagine how powerful that is if you put $100, and let's say your account size is 10 grand. Okay, if your account size is 10 grand, then I would probably put like $5 to $10 per pip. And in this movement, let me just show you a fairly typical movement. Even any of these movements are pretty typical. These are all 5 pips, remember. So 5 pips, each of these bricks in your direction times $10 is how much money that is. So this brick right here is 5 pips. Okay, this is $50 worth right here. Okay, so imagine you catch this wave right here. Okay, and then you don't stop out until this first green. Now you have to watch this, right? So you want to watch this, wait for the first green candle, and then stop out. So, but then this thing is, you'd be making 12 candles worth. That's $600 right there. You'd be making in this movement right here. Okay, even the smallest movement right here. So if over here you bought, Okay, 1, 2, 3, 4, 5, 6. 5. No, sorry, 1, 2, 3, 4, 5, 6, 7. Because you'd stop it right on the first red candle. That's 7 times 5 times 10. That's 350 bucks in this movement right here. Okay. So just notice how they kind of move. Most of these moves are, if the blue line is up, most of the red candles will have more than 2 or 3 red candles at the same time. Okay. If the blue line is down, then you notice that the green candles is green consecutively over and over and over again. Okay. So hopefully I've kind of shattered your world by giving you this video and showing you this. This is an amazing strategy. So anyways, I think this video is long enough. If you have any questions, which you'll probably have, let me know. You can get Renko. You can just Google Renko charts and you'll find how to do it, how to get it. And you basically want to put it right in your expert advisors in the Renko charts. Okay, and then you just drag it. Now there's a lot of videos on YouTube that you can just research and find out exactly how to input Renko bars and how to adjust it. But if you do have an issue with it, then comment below and let me know. I don't think it will work right now because the markets are closed. So I don't think if I did one as an example, I don't think it'll work. So I'll just skip it for now. And if you guys don't know and just can't find any information on YouTube, then let me know and I'll get back to you as soon as I can. All right. Hopefully this was really helpful for you guys. Comment and like below. See you later.